Hi, this is Kim Watson. Welcome to a weekly outlook. Apologies for being slightly late on this. It's actually Tuesday at 9:50 in the morning when I'm actually recording this. I do like to do it with the room members, so here we go. I'm doing it with the room members. So looking at these markets, before I do, I'm going to just look at the key news due out this week. Well, we've got a quiet day ahead of us. In real terms, we may get a bit of volatility around 9:40, or might be seeing some volatility around 9:40. We've got a speaker there happening at the moment. Aside of that, pushing through the week, the most important thing is the 7 p.m. Tomorrow, 7 p.m. the FOMC economic projections statement, etc. Why is it important? Well, there's an interest rate increase expected, but there'll be a lot of focus on what next. And if you look down, I'm just going to hopefully bring this little table in here. There we go. And you can see the 26th September meeting, target rate probabilities. This is the CME site, and it's worked out on a number of different criteria, but look at that, there's a 93.8% chance of a 0.25% interest rate, so that's pretty much priced in there. That's pretty well known out in the markets. As I say, it's out there. So what happened if it wasn't a 0.25%? Well, it could be 0.5%, but that's very unlikely. Only 6% suggesting a bigger increase, but that's out there. Now, what will be more interesting is what in November they're not expecting any increase at all. It's expected to stay the same, but come December, are they going to pitch it up another 0.25%? Now, when I looked at this a few weeks ago, it's about 60%, but it's risen gradually from about a 50% chance. Now there are actually some suggesting, or there's some thought it may be cut back again by looks of things. Oh, sorry, yeah, no, left alone. Let's get this right way around. 2%, 2.25. So some think it may be left alone. Some some think it may be increased. But there's still some thinking it may be increased a lot more. But we'll see. I assume these are the people that are putting their dots on the 0.5 increase this time as opposed to a 0.25. So looking ahead, it does look like there could be two now, and it's this the comments that may surround the December increase may be more significant than the current data coming out there. Okay, so the important number coming out there will affect all the US dollar pairs. There should be volatility kicking around that. Okay, so what else? Important. Well, we've got the New Zealand rate statement, etc. Now, again, I'll cover the New Zealand dollar later because I've been looking at the extreme ratings on the COT analysis for some time, and we'll look to see where we are with that. But certainly, that's 10 p.m. on Wednesday. So Wednesday is a busy old day for central banks, isn't it? Moving through Thursday. Core durable goods, we get a bit of volatility or sticking around that. The final GDP will again, that may be the more significant number of those anyway, but it's the final. It's we've seen all the stuff before, but they will be looking forward to, I mean, we've got the press conference for the Fed at 7:30 on a Wednesday, but there's another speaker, Fed, same one actually, speaking there on Thursday evening, due to speak at Senators Reed's Island Business Leaders Day. Okay, well, that may still give some volatility in the markets there. Yes, he may just be saying a lot of what he's previously said, but we'll see. That aside, Bank of Canada speaker there later on 10:45. They all want to have a little get their oar in, don't they? Pushing through Friday, not a lot of major data there. GDP is a monthly figure for the Canadian dollar. It does create volatility without any doubt. How much we'll see. Personal spending. We've got an NBC Ramsden speaking Friday afternoon, but lots of blips and blobs there, but nothing massively significant. So yeah, nothing else to be drawn on there. So let's get rid of that, and let's have a look at the technicals with a little bit of sentiment. So technicals here, euro dollar, it is still pushing up. It managed to close above its weekly 21. That weekly 50 has got to be a draw. It's flattened out. We were looking at this last week, I think, but it still looked like it was rolling a little bit, but I was suggesting it might be looking like it's flattening, and it's flattened out. That equates roughly to the daily 200 there, so that may still be targeted. Now, I looked at this and I talked about it a bit, but no doubt. But I'm just sort of looking at this sort of cup and handle, or whatever you like to call it. This ABC movement may see price running there anyway. It's still bullish on this movement here, would take us up to around about this area. So still remain bullish. I'll just have to wait and see how the how things if it can get above this area which I've highlighted. If it can close above that, well, then it just makes it an easier route there. But it struggled around this area. No surprise, it had a lot of a struggle up until now, but it has closed higher than it had before, and it's tested it again, and potential is it will push on. So it's the euro dollar. Let's look at the sentiment on the euro dollar, and sentiment, there was a bit more shorts coming into play on this. Sorry, I just hold it still. A few more shorts coming in there, but also more, I mean, net position not changed significantly from the larger money, and also leveraged funds. Well, not a great deal of change there. The leveraged funds are still relatively short on the euro, but that could be with hedge funds. I mean, they could literally be using these positions to hedge at times, but why they would be hedging now with it, I'm not so sure. But there we are. Or they may be playing the cash market with this as a long-term position, but whatever. It's not a great deal of change there. Sentiment generally for the bigger numbers there, the asset managers, pension funds, etc., still sort of 1, 2 to 1, or around about 2 to 1 long. And the technicals are showing us long. It's important. Pound. Let's have a look at the pound. Let's take a weekly view of this. And last week it did pitch into that. Let's put a graveyard doji is the technical term for that candle, I believe. It does look a bit grim. It managed to break that weekly 21, but closed below it. It gave everything back. On Friday was the biggest down day it's seen this year. It's pushing up a little bit at the moment. Do I believe in this? Not particularly. When I come down to smaller time frames, it looks a little bit messier. You can certainly argue that it's still in an upward trend, though, on the dailies here. And there is a potential it could still push up if there was an agreement to be announced anytime soon, or change, or more possible movements. We could see a push towards that 200, that daily 200, but I think it's going to be unlikely to be this week, that's for sure. Maybe a long-term picture. And well, I'm looking at it on an intraday basis, on a bearish statement view at the moment. That may change though. Okay, so the sentiment on the pound remains bearish, and in fact it got even more bearish by the asset managers there. Although, yeah, they even took their long positions off, so that was a net minus 5,000 contracts running between that, and the leverage funds just taking the money off the table, effectively. Reducing the size of both sides of the trade, so staying fairly much where they were. But the short position, really, they're just getting, as I say, edging more bearish. Perhaps they don't have the belief that an agreement's going to be made. Right, that's the pound. The yen. The yen has been running up back, and I mentioned this morning. I brought this up on the daily outlook chart, or morning outlook chart, and it's still, we've got that weekly 200 above us. It's looking like it's got some potential. It's still pushing up in this upward trend, so bullish is as it looks at the moment. Now, we did run into the bodies of those prior candles from July there. Now that initially gave us resistance, but very next bar On Monday, pushed back up, and it's been pushed up and heading back up at the moment, looking like it's going to be moving towards its monthly R2 at this rate, and those prior highs, and then the monthly R2, I should say. So still looking bullish at the moment. And where are we on the sentiment for the yen? Well, short positions, long positions have not really changed too much. There's still this overall short position kicking in here. Slightly changed picture as I'm looking with they've slight belief maybe that there's a bit more strength coming in from the hedge funds, but the asset managers, not massive position sizes they've got here, but it's still, well, pretty flattish, I would suggest. I mean, it's just over 55% short there, so there's still a non-committed sort of commitments report. Okay, but as I said, for me it does look like it could be pushing over. In fact, let's just have a look at the chart down there and look at the overall positions. Nope, that's fine. I was just checking that we'd see we're not crossing any zero lines. Okay, Aussie dollar. Aussie. What's happening here then? It's oh, there we go. Weekly picture first. That would be nice. Let's put a weekly pivot swing in here. So it's a bullish sort of candlestick pattern that is popped in here, but not triggered at the moment. Now the weekly 21 is not far above us. That's been tested before, so even if it did get as far as that, it could push on beyond that. But at the moment, it's sort of this point of indecision. It's run into its back into its daily 50. It's pulling back a little bit from where it is, pulling back from here. So bull flag at the moment. We'll see how it develops, but potential is that it could push and retest that 21 and that trend line there. So it's bang onto the trend line. Last week there, last Friday, it ran into. Okay, so possible bounce to be had, and the continuation. What's the sentiment looking like on the Aussie now? Let's have a look. So the Aussie sentiment we're looking at here, asset managers, well, they're mainly still short. There's not, and in fact, look, they've even added to the short side of things. So the big institutional is even more bearish. Net flattish on, so it's not quite flat, is it really? It's a 60-40 looking at that. Yep, 60-40 on the leverage funds there, but the erring is still to the short side. Not massive, as I say, not massive positions held here. Again, it's relatively light positions, but I do wonder with all that negativity whether we will see that break and change at some point. As I say, technically, technically it's still in a bear trend. If it can break above that trend line, well then all things change a little bit there. We may see more positive data coming through. I think it'll help if there was any dealings, of course, with China and the US. It certainly helped the Aussie dollar quite significantly, and that's probably the main culprit of holding the Aussie down at the moment, because they have mentioned that the next interest rate move is more likely to be an upward side than a downward side. So Canadian dollar weekly picture here. Well, it's a bearish pivot swing the previous week. Last week we saw some continuation of that move. Still wonder if the weekly 50 will be hit. It's got there's certainly a possibility of that being hit. Actually, if I come back to that weekly chart, one thing you'll notice though is this is still in an upward trend overall in this bigger picture. High lows and higher highs. So effectively, although we've had a good few weeks and some movement to the downside, it is still effectively trending to the upside, but we'll see if it works out a new bottom here and puts a higher low in from this point, or whether it's got more downside. With the price of oil, it's been helping it somewhat, but that in itself could all change. Looking beyond where we are then, down to the daily, daily wise, still looks bearish flag in this picture here, so we could see a bit of a rollover at some point, back down towards that daily 200, but let's see how it moves. But at the moment, as I say, it does bigger picture, it looks soft for the Canadian dollar, in other words more upside. This daily picture does, to be fair, look like it's still got some potential downside. And the sentiment sitting around the Canadian dollar. Okay, there you go, long photo, more of a long picture there, but getting, well, sticking out. Actually, positions coming off both sides there, but still nearly, well, 3 to 1 on the sell side from the leverage funds, and as I say, just slightly there, 55.45 long. So not a great change, not a great deal of change there week on week. Okay, one final pairing. I'm just going to look here. I say one final pairing very briefly, running to New Zealand dollar here. Just show the picture here. This has also been given a hard old time for good reason, partially. Now we do have the Bank of Canada meeting this week, so we'll see what comes from that. But at the moment, we've got a weekly pivot swing, much the same as it was. Pretty decent picture, same as the Aussie there. It is pitching and looking like it could run towards that weekly 21 at some point, and if it does, that triggers the pivot swing, and it may even go further. However, it is still in a sound downward trend. It doesn't matter how you look at it, it's in a downward trend in terms of lower highs, lower lows, but it has broken what was a significant trend line, just a straightforward trend line from the highs right the way through there. It has broken that and closed above that, so it may have some potential there for a further kicker. And the sentiment was the big thing. I mentioned this a few weeks ago. I've been looking at it all the time since, but let's see if I can bring it up. Which wrong one? I want that one. Let's just bring the sentiment in there. And well, what really I was looking at, and it hasn't got any better, is this extreme up here of sentiment. That the overall sentiment is so. I know this is showing it the plus side. Well, this is the dealer's position, so this is inverted, so if it's up here, that's effectively a very negative bearish market, or bearish sentiment. Now at some point we could see this squeezed, not guaranteed there'll be any point soon, but could see more of a squeeze. I'll just widen this out. You see how extreme it is. It's gone beyond each of the previous points, and you see when these previous points have been hit, around these times, not too far afterwards, we've got a change in direction. So each time that pips in there, it just gives us a bit of a kicker thereafter. And in fact, I need to almost pop here. I mean, this may have been a little bit lagging there, but each time these happen, we tend to get the a bit of a bounce. We'll see, but this is the most extreme it's ever been since this new measurement was taken. I say new measurement, but new reporting method was being used, so very extreme there. Okay, so technicals, as I said, got the potential for maybe a push up, but the Bank of Canada's Bank of New Zealand even. Did I say Bank of Canada earlier on? If I did, I do apologise, but that's likely to affect things this week. Okay, that's it. I did say Bank of Canada. I'm going completely crazy, so I do apologise. Right, okay, so that's the currencies. Let's have a quick look at gold. I'm just going to look at this very briefly. I've remained relatively bearish because it's still in a bearish trend, but it's in a consistent holding pattern here week after week. It pops up, pulls back, and as you can see with those shooting stars sitting there, maybe inverted hammers, but maybe it's grinding out a bottom here. But I can't be bullish yet. It's sort of worked its way out the side door in terms of the trend line there. That's the gold. Let's have a quick look at the S&Ps. He says there's the futures here weekly. Let's have a look at what's going on. As I've been saying for such a long time, sound like a broken record, but it's still remaining and still making new highs. No surprises there, and it just continue pushing up. Now it's interesting, the Saxo's chief economist or chief finance man, we saw a couple of weeks ago, a week or so ago, saying how overvalued this market is. Well, it's going to continue to be overvalued by looks of things, and excuse me, has the potential still to keep on kicking up. Every time it looks like it's going to put anything more bearish and more significant coming in there, all things change. And yes, at some point it's got to be due, but it's probably the time when everyone says, oh no, it's going to carry on going up, and start easing up and buying into it. Let's just have a quick look at the sentiment on it actually. Let's go to COT reports here. Just have a look at the sentiment, the S&Ps. There we go. The important one to look, if you're looking at this, is the E-minis. It's much more volume on the E-minis. And just look at the sentiment there. It's gradually increasing on the short side of this these asset managers here, but it's still 2 to 1 roughly in terms of the overall position. There you are, 2 to 1, 33 to 66. 2 to 1 there. The leverage funds have been bearish on it all the way up, and no doubt they're still bearish on it. They're nearly 2 to 1 the other way. Yeah, 66, 33. So there you go. Completely argumentative state here, but what's the chart showing us? It's bullish, and the sentiment remains from the bigger boys there bullish. So there we go. That's it for me for this week. Have a great one. Bye for now.